Hey guys, and welcome back to my channel. The Bank of Canada just held its key rate yet again at 5%. We're going to talk about what this means for the real estate market moving into 2024. I'm going to do a quick market update, and then I'm going to close off the video with some tips for buyers. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you wanted to chat with me one-on-one, you can book me in the Calendly link below, but subscribe to this channel regardless so you don't miss a future video. All right, so the Bank of Canada, they held their key rate at 5% for the third consecutive time. The last time we saw any movement in that rate was a rate hike in July. So essentially signaling to the market that the rate hiking cycle, as we all have been expecting, is essentially over. Now, the interesting thing when the Bank of Canada released their data and their metric is they spoke specifically about our GDP, Canada's economy essentially, and the Q3 data came out showing that our GDP actually declined. The economy declined. But the interesting thing is Q2 data initially came out that GDP had also declined. However, when they released Q3, they showed that there was some sort of miscalculation with the Q2 number. It got edited to show marginal growth. So the reason why this is significant is it takes 2 consecutive quarters of GDP decline for us to be in a recession, for us to officially be in a recession. And just very interesting that the Q3 number comes out at the same time that the Q2 number is edited to show growth, because previously it had also shown a decline as well. We would have entered an official recession had that number not been edited. So looking deeper into this, I think what we're seeing from the Bank of Canada here, I'm not saying that there was any like fudging of numbers per se, but look, the perception of having that R word, the recession word out there in the public, I'm sure put some fear into them. And what that tells me is that these rate hikes that they've done quite drastically has had an even greater effect on the market than they may have thought. And we've talked about on my channel how the Bank of Canada, they have a couple tools to get inflation in line. Number 1 is the interest rate. Number 2 is public perception and the words that they use to basically convince people in a certain direction to either feel positive or negative. So in this case here, we're not officially in a recession, but that depends who you talk to. There's definitely some trepidation around that word and having people believe that we're in a recession, because what happens when you hear that, people reduce their spending even further. Also in the report, they've showed that consumer spending has essentially flattened as well, unemployment rate increasing too. So all of the signs are pointing to inflation coming in line. I think the last number we had was 3.1%. With the bank's target at 2%. But, the long and short of this all is, 3 consecutive rate holds, essentially telling the market that we're done with rate hikes, barring something incredibly unforeseen. So what does this mean then for the real estate market as we head into the next year? The interesting thing that I've seen on the mortgage rate side of things, and specifically fixed mortgage rates, which are driven by the bond market, is bond yields have declined significantly. And what that means is that the fixed rates are also coming down just as significantly. So I've had clients that had rates locked in. We've had firm deals that are not yet completed, and they're seeing their rate getting bettered 2 or 3 times between subject removal and actually completion of the property. I had one client, his rate has dropped almost 0.5%. I'm seeing 5-year insured mortgages now 4.99, 5-year uninsured in the 5s. So mortgage rates have come down quite a bit, and they're going to come down even more significantly on the fixed mortgage side. What this is doing for the market, and here we have again a third consecutive hold. Buyers are very much in preparation mode. In my world, for sure, I've had plenty of buyer consultations of people that are getting ready for Q1. They're seeing these rate declines come into the market, and they want to make sure that they're prepared to jump out of the gate before we potentially see an interest rate cut next year. And some economists are suggesting that we're going to see a cut as early as Q1. I think that's a little bit swift, but most are saying definitely by midway through next year we should see some sort of rate cut just based on the direction that the economy is going. And we all know what happens in our market here is as rates come down, prices continue to increase. Now, here's the interesting thing as we are nearing the end of the year when we look at prices and we look at real estate. I've talked about this before, how if you were to make your real estate decisions based on the headlines that you read, you'd be making critical errors in your real estate journey. And this is another year, if we look back at headlines over the last year, this has been a down year, if you will, for sentiment in the real estate market. Sales quantity has been lower. Outside of the headlines surrounding housing supply and all the stuff that the BC government is doing, which I think has been met pretty positively, if you look at the actual market stats or on the market, those types of headlines, they've all been really negative. But if you look at the year over year price, benchmark price of all property types, and that would be detached homes, townhomes, condos, everything is up 6 to 7%. And you would have no idea if you just read headlines. You would think that Vancouver real estate is doom and gloom. Again, this has been a bit more of a challenging year for sure, but yet property prices, still increased. If we look at, sales quantity in the Metro Vancouver area, yes, significantly down. I think we're down about 33% off of our 10-year average from a sales quantity perspective. Inventory has now ticked up as well. We are at 3.7% above our 10-year average. So we're still not crazy sky-high inventory levels, but if you followed my channel for a bit, earlier this year we were talking about a dearth of inventory in the market. But what this goes to show you is just how resilient the Vancouver real estate market is, and how strong our price is, and how much demand there is for our real estate no matter what type of market. Yes, sales quantity is down, but if you look at benchmark prices, pretty much every city across Metro Vancouver, outside of West Vancouver, saw price appreciation, saw gains. But again, you would not get that from reading headlines. So the message that I would give to you is ignore the headlines, ignore the noise. And if you want to consider me noise as well. Make your own decision. Go to a trusted realtor that you, of course, can trust. Ask them to back up anything they tell you with data. So when I'm working with my clients, if I'm going to tell them that something is a good deal, I'm not just going to tell them it's a good deal. I'm going to show them price per square foot metrics. I'm going to show where we were a year and a half ago when the market was a little bit hotter. I'm going to back up what I tell people with data, and that allows the client to make the informed decision. Don't trust the data that you see in a headline. Sometimes within the articles, it'll take a much different approach than what you actually see in the headline, right? The headline is there to capture your attention. If you are going to base some of your decisions on these articles, do read the full article, because sometimes you'll read the article and you'll look back and you'll say, that really wasn't the right headline for what I actually found in here. So check out the articles, and if you are so inclined, you want to make decisions based on them, send the articles to your agent and say, hey, what do you think about this? Is this making sense? Can you show me any sort of data or give me any sort of insight that tells me differently? But that's what I would really focus on with our market, is that our price is so resilient. And even when people are thinking that people's backs are against the wall because of the way rates have gone up, there's very few sellers out there whose backs are against the wall, who are willing to sell properties at a loss. This reminds me of a scenario I'm working on right now. I'm working with clients and we are hunting around for a great deal out there. And I've done several videos this quarter, at least a couple, where I've talked about this is the season for the low ball offer. This is the season to send something low, to back up your offer with data, and try and nab a great deal. And what we're learning out there is there are very few sellers that have such a strong need to move off of a property that they're willing to lose money. A lot of them aren't even willing to break even. We're looking in the assignment space and we're hunting around for deals completion is coming up around the corner. Often you would think that these sellers would just want to move off of these properties. But it's not happening out there. Sellers are being resilient. They're saying, look, I'm just going to wait until the spring. I'm going to take it off the market, put it back on. I'm not going to give this away. And it just goes to show you that value of Vancouver real estate, right? I do see some of these sort of deals that are selling, say assignment wise, below cost. I see much more of it in the Fraser Valley, to be honest, realistically. There is more supply out that way as well. A lot of new product finishing. Metro Vancouver inventory on the grand scheme of things is still pretty tight. So again, hunting for deals, yes, 'tis the season, and I think December is a great month to do that. But nobody's out there giving away property. And so people are finding ways to be able to hang on. And when we look to the next couple of years where there's going to be all of these mortgage renewals coming up, I think everything just lines up with what we've been hearing about the Bank of Canada. Obviously the federal government, they do not want to see the homeowner in pain. They do not want to see people have to sell their primary residences. Selling an investment property or someone's second or third condo, yeah, of course, they don't mind seeing that and having that inventory hit the market. But the way that they have worked the rates, in previous video I mentioned how it was pretty much like a car steering sharp in one direction, dropping the rates, sharp in the other direction, increasing the rates rapidly, and us, ending up in the middle. And I think that's what we're on pace to see. One of the chief economists out there, Benjamin Tal with CIBC, he's thinking that rates could be cut by as much as 150 basis points by the end of next year. And so again, everything just kind of aligning to maybe protect the homeowner and have those rates come down. So at renewal time, there's not going to be as much pain as we might have expected. My channel, other channels as well, I'm sure we've all talked about how people aren't feeling the interest rate pain just yet. At renewal, they will. And now we're kind of seeing that plan to soften any kind of pain moving forward. So as we look into next year, where do I see the real estate market going? I've said it before. I know this sounds like obviously a realtor is going to say this, but I'm incredibly optimistic about where this market is going to go. I do think that we are going to continue to see an uptick in supply, but the buyer demand, as we've talked about, sales quantity down last month, 33% below the 10-year average. That buyer demand, it is going to pick up now. It is going to pick up in Q1 in spring. More buyers are going to come back into the market. So if I were a buyer today, I wouldn't necessarily make a move right now unless you're ready to go. You've spoken with a mortgage broker, you're happy with the rate, you're happy with how your finances might change from being a tenant to a homeowner, or perhaps you live at home right now. If you're comfortable with what that financial situation is going to look like based on today's rates, I wouldn't stop myself over the holiday season. I think there are deals out there to be had. And I do think the market is going to pick up a little bit sooner than our typical spring market, which is, towards the end of February and March. So as a buyer, just get your stuff ready to go. If you're so inclined to start moving that process forward, I have a couple buyers who really want to have a high sense of urgency because they foresee what's happening in the market as well. And I'll tell you, as soon as these headlines start shifting positive, as soon as sentiment starts shifting positive, because obviously not everyone's a realtor, not everyone's a real estate nerd, reading the stats all the time, living, breathing, and seeing it. But a lot of people do have to rely on what they hear on the news, talking with other people. Sentiment is going to shift significantly in Q1. I think the market is going to pick up significantly as well. I don't think prices are going to skyrocket in any sense like we've seen in previous years. Obviously, those were a result of extremely low interest rates. So affordability is still an issue. That's always going to be an issue. And hence, I think that's going to put a bit of a cap or a damper on prices. So I don't think prices run away from us. But again, in this last year over year, we saw prices up 6 to 7%. I could see maybe some healthy price appreciation in the 4 to 6% range over the course of the next year. Obviously, anything can happen based on where that interest rate is, but I expect next year to be busier. If you're a buyer, maybe a good time to start getting your your ducks in a row. So that's what I have for you this week. I hope you enjoyed this video and you learned something. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content like this, subscribe to this channel so you don't miss next week's video. And lastly, if you're in the Vancouver area or the Fraser Valley and you wanted to talk with me about your real estate situation, you can book me for a call in the Calendly link below, or just send me a text, give me a call, shoot me a message, whatever's easiest for you. But I want to thank you for watching again this week, and I look forward to seeing you in next week's episode.